Crypto Hotep here with another investing video. We are on week 98 of the family portfolio and dividends tracker. I really appreciate the time and I really appreciate you guys checking out this video. As always, anything that we say in these videos and in these tracking videos is not financial advice. Please do your own due diligence when it comes to investing, whether it be stocks, crypto, silver, metals, anything of the sort. Do your own research. But if this is your first time watching the video, basically, in a nutshell, I gave my family, I shortlisted some stocks, some companies for my family to choose from, and then they proceeded to choose the ones that they most resonated with, and then we use M1 Finance, you'll see shortly here, for our broker of choice. And every week you follow the investment journey with me and my family as we go through the portfolio, go through any top market news that we may find very viable and important, and we track our portfolio. We track the dividend balance, the dividends itself, the activity, the deposits. We don't do a lot of selling, but we do a lot of buying. So if these videos are helpful, guys, please like, subscribe, comment, please reshare it. Let me know what you think. And with that being said, we'll jump in here, guys. This week has been somewhat quiet in terms of news. We had State of the Union with President Trump this week, which went fine. And then we did have some earnings. So NVIDIA had earnings, and again, the American economy was on the back of NVIDIA, but they showed up for that. The market's been in a weird spot this week, though. It's been a roller coaster ride, if you will. But some of the earnings here, or one of the earnings, I should say, that was very important for the family stock portfolio is Celsius. So you'll see shortly, if you're not familiar, but if you follow, my wife has there's a very large position in Celsius for her portfolio. And Celsius did have their earnings call. It was actually today, and they beat it. So they double beat their earnings, which just means they beat earnings per share and revenue. The revenue, they did dwarf at 721.6 million versus a forecasted 639.14. So that's fantastic. You love to see that with Celsius. Okay. The other thing to keep in mind is Apple. Apple is going to be unveiling some new devices next week. So next Monday, there's a lot of talk about some of the devices that Apple's going to be unveiling. They may be unveiling a budget-friendly MacBook. That could bode really well for Apple. And a couple reasons why it would. It would show that Apple is more in tune to the economy and how people are buying. But it also goes to the fact of they are really going head-to-head with Windows laptops. Windows laptops are usually the more affordable of the brand. And now if they have an affordable option, that could really start to eat into Windows lunch. So watch out for Apple. Apple's going to make some moves next week. But before we go to week 98, okay, we're going to go to week 97 and look back. So week 97 saw us with a decreased balance of under 4,000, $3,983.17. Money weighted rate of return year to date of only 1.09%. Dividends earned of $6.30, and then market gain of $35.92. So what happened this week? So for week 98, we did boost up here. So our balance is now back over 4,000, and now we've cracked 4,100. So our balance as of right now is $4,108.72. Money weighted rate of return of 2.89% year to date. Market gain of $106.37, and dividends still at $6.30. So what actually happened? Let's go to the activity. Okay, between this week and last week, we had a little bit of activity here. So we had one deposit here. We had a deposit of $35 here, and that deposit here we bought AbbVie, Moody's, Sony, Tesla, Amazon, Microsoft, and Apple. So we had a deposit of around $35, and this is what we bought on February 20th. Okay, right here on February 20th. So Again, this is a deposit week, so we had one deposit here, so this was just an extra deposit we had out of our normal bi-weekly deposit. This deposit is for this week, and this is like our normal deposit. Again, if you're not familiar with the videos, typically we only deposit every 2 weeks, and it's not a very substantial amount of money, but it's to show, hey, you can develop and generate wealth in small incremental deposits, and if you invest into the right companies. So this is our regular deposit right here, $20, and we only have 4 buys. We had Amazon, Microsoft, Tesla, and Sony again. So these were our 2 buys here for February 20th and February 26th. Okay, let's go to everybody's portfolio here. If we go bottom to top, as we always do, our middle is at the bottom. And let's hop into our middle's portfolio. So our middle has a balance of $565.87. Money weighted rate of return of very impressive 3.86%. Year to date, dividends earned of $1.75. And then market gain of $18.55. The stocks that we have here, Target is the anchor, followed by Costco, and then Starbucks as well. Amazon is still dipping. Amazon has been dipping, and it's followed suit with all the tech stocks that have really sold off this week and especially last week. We're starting to see a little recovery though, so watch out, because if Amazon catches some footing and their price starts basing out and they can recover, watch out for Amazon. Sony, same thing with Sony as well. Sony's starting to find some support, some demand areas, so I feel as though Sony's going to get a nice pop soon. Same with Google and then Tesla as well. It's funny because I think Elon Musk had an interview right before I started recording this. I saw on Twitter or X, whatever you want to call it. He had an interview, and his quote was, "Hang on to your Tesla stock. I think it's going to be worth a lot of money. That's my bet." So I agree with him wholeheartedly. So that's our middles portfolio. Still a very good portfolio. Still with one of the top return rates of the whole entire family here individually. Let's go to our youngest. Our youngest portfolio sits at $589.13. Money weighted rate of return of 2.16%. Market gain of $10.95. Dividends earned of $1.06. So here we have Starbucks. Again, Starbucks is anchoring it. So is Costco, very good companies. And then Apple. You see Apple ticking up a little bit. I believe Apple is going to do some weird moves next week. So watch out, especially with the unveiling of some of these new products that they have, whether it be like we talked about that low budget MacBook. There's also word about maybe unveiling their Meta type glasses that can record video. You know what? I will say with Apple, it's funny because Apple does a lot of things that other companies do, but they do it after the fact, and they do it well. Like, I think I saw today Samsung Galaxy handset device, and it had the privacy screen built in, so you didn't have to use a screen protector anymore. The privacy screen is built in, and you can turn it on and off. You can also turn it on and off via different apps and different notifications. It's actually pretty slick. I believe Apple is doing a lot of note taking from that, because they do this all the time, like with Samsung. And people always wonder, like, why is Amazon so late to the game? They're late to the game because they want to get it done right, and they want to do it the Apple way. So they see what other people are doing, they notate it, and then they test it out in their environment, and then they unveil it. And people still gonna buy it. Like, people complain all the time, but they're still lining up outside the Apple store every year when there's a new iPhone. So it's going to be the same thing over and over again. I think one thing that they did not do well on was the big goggles, those big like Meta type goggles that they had. That wasn't a good product to me. That wasn't a very good product. It was very tone deaf with how the economy was. Nobody's spending that much money on that device, nor are they walking outside with those things strapped to their face. It's not practical. Now the glasses, I think the glasses would be practical. There are a lot of people using those glasses right now, and it does okay with recording. I think Apple can turn that up a notch. So again, I'll get off my Apple soapbox, but that's how I feel. I think Apple is in a prime spot, is doing what Apple does. So Sony, again, Sony at 10.8%, and then Tesla is down a little bit over 9%. Not really worried about that. Let's go to my wife's portfolio. My wife's portfolio is still above 600, $614.59. Money weighted rate of return of 2.72%. Market gain of $15.54, and then dividends earned of 17 cents. Like this, and you can see, like, this is where, when I talk about you need to have a strong stomach for stocks as well as crypto, look at here. What's crazy is we had a all-time high bounce for my wife at $614 back in January, on January 27th. That was the top, and then it proceeded to go all the way down to $573.28. And then we just surpassed back up, and now we're sitting back at $614. So again, this is what I mean. Like, you need to be willing to hold very good companies during the rough patches. Okay. And with my wife, she has Google, Pepsi, Celsius is what we talked about, and that's up 18% year to date. That's not a typo. This was just down in the red last week. Last week, this was in the red, and I think it was at maybe a negative 2% year to date, and now it just bumped up to positive 18% year to date. Again, this is what I am talking about. Tesla down over 9%, and then Microsoft is down over 15%, but watch out for Microsoft. It just hit the 200 week moving average, and it's nearing a weekly major level of support and demand. Microsoft is very, very undervalued right now, and it's very cheap. And it's a very valued company. So this is one of those companies that Warren Buffett always spoke about when he said you want to buy very good and very well-run companies, but you want to buy them at cheap prices. This is a very good example of that with Microsoft. Not financial advice, but just saying. Okay. Let's go to our oldest. Our oldest stocks sit at a balance of $1,167.80. Money weighted rate of return year to date of 4.04%. That is the best return rate percentage out of anyone. That's huge because our oldest typically doesn't have the highest return rate percentage. It's normally like in the middle. So you'll see why shortly here. Dividends earned of 72 cents, market gain of $43.79. This has been up and to the right since the beginning of the year. It's crazy. We had this little dip here, but it recovered nicely. It's wild, but you'll see here. So Apple, we just spoke about Apple. It's just up 1%, not a big deal. But Costco's up over 14.5%. And then McDonald's. This is where the savior's coming right here. McDonald's made a lot of news this week because they unveiled a new burger. I believe it's called the Big Arch. And I think the Big Arch is going to be making its U.S. debut next week or something like that. But that made a lot of news. Okay. So McDonald's is actually almost in double-digit year-to-date gains for our oldest portfolio. That's insane. For a company as old as McDonald's, it being a dividend company, to have double-digit gains, or the potential of, is wild. And then Tesla is down over 9%. Just imagine if Tesla can find its footing here and uptick and potentially get in the green, watch out for our oldest portfolio. It's going to do numbers. Just saying. It only has 4 holdings. That's it. Just keep it simple. Just very simple. And then last but not least, let's go to my portfolio. My portfolio is the balance is $1,171.33. Money weighted rate of return year to date of 1.78%. Market gain of $17.54, and dividends earned of $2.60. So again, technology is bleeding out. I did buy the dip on Microsoft. I've added Microsoft more Microsoft, I should say, to my position here because I've wanted more. What else? Let's look. Finance is also bleeding out here, as we spoke about. So finance is not doing too hot right now. So Moody's and Visa kind of bleeding out right now. Not really worried about that. Again, these are valued companies. But real estate's still up. Realty Corporation still doing the thing here for me. That's my income driver, and we're up over 18%, 18.5% actually. Industrials and energy We know what that is. Waste Management and Cintas, they're up very respectively right now. Okay. Um, Consumer staples in shopping, we spoke about them before. We have Costco and Lowe's. Can't really do any better than that. Again, they're very boring type companies, but they're in the green versus your tech and your speculative stocks that are dipping right now. Okay. Pharmaceutical, we're down on AbbVie, and then restaurants and food, Coca-Cola and Domino's Pizza, we are up over 5.5% there. So all in all, I'm not mad at my portfolio at all. I think we're going to catch some steam once we have technology coming back in the fold, as well as finance. And I can't wait for that to happen. I think we're going to see a little bit of relief in terms of tech stocks, maybe in the next week or two, where we may see some prices for tech stocks go up or pump just a little bit here. So we may see an uptick in that with my portfolio on the tech side, as well as some of my family members in their tech positions as well. So again, I think the big thing is do your research. I preach it every week. Do your own research on the companies you like. Make sure it's a long-standing company that's been through different economic cycles, if you will. So recessions, .com bubbles, pandemics, those type of things. So make sure that you really do your own research in these companies. I think the biggest thing is I became profitable in investing and trading when I kind of blocked out the noise of everybody else, and I focused on my own process, me understanding those businesses that I put my hard-earned money in, and me trusting them. And I think, again, that's another big thing with Warren Buffett. One of my favorite investors of all time is he invested in things he understood. That's why they really didn't have NVIDIA in their position, Berkshire Hathaway. They never had NVIDIA in their position or anything like that. And they just added Google. But they've had Apple, they've had Coca-Cola. I believe that they also invested into Dairy Queen. So they just invested in businesses that weren't very hard to understand for them, and they understood how it worked and how it made money. So I think if you follow that simple rule versus trying to get rich quick, then you're going to survive and thrive in the investment game. So as always, guys, if this video was helpful, feel free to like, subscribe, comment. And again, for week 98 of the family portfolio, we have a balance of $4,108.72. So cracked 4,100. Money weighted rate of return of 2.89%, market gain of $106.37, and dividends earned of $6.30. As always, guys, thank you and happy investing.